Diamond Bank released its first half earnings on Friday. The bank's turnover was down by almost 5% to 44 billion naira, while profit after tax was down by 74% to 1.2 billion naira. Joining us now from our studios in Lagos to unpack the numbers is Abdulrahman Yinusa. He's a Chief Financial Officer at Diamond Bank. Thanks so much, Abdulrahman, for joining us this afternoon. Well, the bank is still seeming to be under quite a bit of pressure, and that with the bank's exposure very much to the retail market and SMEs specifically. So run us through the pressure points that come to bear on the organization at this stage.
Okay, good morning, Alishia, and the rest of the viewers. I think we should remember that when we had the call the last time, when we did our first quarter result, we were very clear that 2011 is a year that we needed to do some cleanup. And what is passing through and what we are seeing now are some of the effects of those commitments that the new management has made. Fundamentally, the business still has a robust base, but in terms of bottom line, that is that negative effect of the carryover of the what we may call legacy loan cleanup issues.
What's interesting is that we've got loan growth coming in strongest. You know, we've had what, an 18.5% year-to-date increase there, 8.5% increase quarter on quarter, with slower deposit growth coming in 3.6% quarter on quarter and 12.8% year-to-date. That's seeing the bank's loan deposit ratio increase to 7.5% in the first half. Just run us 75% rather in the first half. Run us through the rationale there and the strides you're making in growing your loan book even further.
Okay, I think that is that speaks to the base of the business. When we came into the institution, we found that the loan base is still very low compared to the peers. And essentially it's because the loan limit, which has been put by the bank itself, was on a very low side to try and reduce the concentration risk. You will recall that in the past few years when there was the meltdown, everybody was reacting in different ways. And I think Diamond Bank had reacted in such a way as to reduce maximum lending limit to about 4% of its capital instead of the maximum allowed of about 20%. Now that has been revised, and we are now being able to go back into the top tier of the corporate, where the risks are lower and the volumes are much larger, and therefore we're able to grow what you've seen of about 30% in terms of the loan book. Now, if you look at the funding base, which is the deposit, you may say that it's about 15%, year on year. That may not be exactly correct because liquidity and deposits are at a point in time. So you have times when things are high, you have times when things are low. But clearly, a loan-to-deposit ratio of about 80% is still very much within the kind of limits that we would like to see. Because in the past, we have somewhere around 70%. And clearly, you need to deploy a lot of the deposits across the network to make sure that you're able to get maximum mileage from the deposits. So for us, we believe that we are just beginning to put in place the building blocks on which the revenues of the future is going to grow from.
And it seems to be happening in tandem with other revenue growth. Non-interest income was up 38.3% quarter on quarter. It was the main driver behind that 16% quarter on quarter growth that we've seen in operating income specifically. So run us through that and how exactly you're achieving that kind of growth.
Okay, you recall that we have said that Diamond Bank is largely a retail-focused institution on one hand, and then try to do business on the top tier. Yes, the top tier corporates normally are very sensitive to pricing, and commission are very low on that side. But on the retail end of the business, we've been able to do quite a number of transactions. And as we increase our risk assets in the retail space from about, say, 30 billion as at the end of last year to about 44 billion as we speak, we're already doing very well in terms of moving into the retail space and giving enough revenue from that end. And we believe that at the end of the day, it is not only interest income that will determine the success or failure in terms of the long run, it's actually the transactions. And since our transaction income are beginning to improve, you can see that the base at which we are going to move into the future is now better assured.
Well, it was announced yesterday that EcoBank Transnational Incorporation has signed that implementation or transaction implementation agreement with Oceanic Bank. We had Diamond Bank having shown interest in Oceanic recently. It's obviously now lost out on that front. What next for the bank in terms of inorganic growth, Abdulrahman?
Okay, I think for a start, we say it was a well-contested bid. As you can see, quite a number of people went into the transaction. And as good sportsmen, we say congrats to the Oceanic and ETI, and wish them all the very best in the integration process. But you recall that when we had the discussion a while ago, I had said that Diamond Bank had two-pronged strategy approach. We have our organic growth strategy as well as the inorganic growth strategy. So the Oceanic one was an inorganic growth strategy, and of course we can always continue with our organic growth strategy. And in that respect, we already have very robust plan on how to deploy our resources into the future. And as to whether we are going to look at any other inorganic transaction, of course, time will tell, and you see as we go along.
Well, management holds a conference call later today at 3 p.m. London, Lagos time. What are the key points that management will be highlighting to investors this afternoon?
I think the fundamental point is to say that this management has taken full charge of the issues around here. We've also been able to put on the table the areas that we consider to be of strategic importance, the issue of loan loss write-off and the issue of rebuilding the institution on the corporate, top tier of the corporate end, and of course continuing to expand what we found, which was very good in terms of the retail business. So I think the idea is to let investors know that everything that was promised is being delivered, and we're going to continue to focus and keep everybody informed as we make progress.
Well, certainly progress that we'll be keeping an eye on. Thanks so much, Abdulrahman, for your time this afternoon.